Hello everybody, in this video I'll explain you how to choose the best mortgage for your needs. This tutorial is based on my experience. I'm not a professional, so before deciding to proceed with a mortgage, please ask to professionals in this field to be sure you take good decisions. Let's start. A mortgage is not a simple game, there are a lot of things to consider, so we have to make some order. Let's select the most important ones. First, the interest rate of our loan, this represents the money you lose. Second, choosing a home for your needs. Third, the budget you decide to use for this operation. And last but not least, the timing, the mortgage length. So, if you are able to best combine these four variables, you will save a lot of money. How can I best tune the budget? Well, you have to know that you are not fully free to tune your budget. To decide how much of your monthly income to reserve for your monthly payment, you have to consider some general rules. The best quote to destinate to the mortgage is about 1/3 of your net monthly income. This gives you the possibility to have enough money for other needs, and you have enough margins in case of difficulties. If the bank accepts to go for some exceptions, you could increase this limit by going to 40 or 50%, taking some risks. What you should not do is going beyond 50%. As this is a very risky scenario. What about interests? The main and most used interest rates are the fixed one, the variable one, and the mixed one. The fixed interest rate has low risk, because your monthly payment will not change during the whole mortgage length. As you can see on this graphic, the monthly amount will not change from beginning to the end. The monthly payment is composed by the principal, or in other words, the loan amount you are giving back to the bank. And the interests, or in other words, the money you are losing and that the bank is earning for the loan. This graph is the typical scenario of a fixed and low interest rate. On this graph we have a bigger fixed interest rate. And here a much bigger interest rate. As you can see, interest rate is very important, because it tells us how much money we lose in a mortgage. In red the money you lose, in blue, the loan you are giving back to the bank. As you can also see, in the beginning your monthly payment is composed more by interests, while in the end you pay back more loan quotes. What about the variable interest rate? Well, the interest rate changes from time to time, it could increase or decrease, and this affects the monthly payment that increases and decreases accordingly. It depends on market conditions. If the economy is strong and inflation is rising, the variable rate rises, otherwise they decrease. As said before, a fixed rate has a constant monthly payment. As you can see here, the variable rate changes from time to time the monthly payment. In the example here, in the first years we have a decreasing rate, and the monthly payment goes from over $1,000 to about $800. After that, the rate increases, and our monthly payment goes to about $1,300, to decrease then again. If we compare this example with the fixed interest rate example, we see that the red area that represents the interests could be similar in both examples. This means that the money you are throwing away for interests could be the same at the end. As a strategy, it could be better to choose a variable rate when it begins to go down, and in that years you could save money. Let's suppose that with the lower variable rate, you save in that 10 years about $15,000. You could give them back to the bank, lowering your current loan. So, if you decide to give your saved amount to the bank, you have paid back more loan than foreseen. This way, for the whole second phase of your mortgage, you get an overall reduction. This is valid for the variable rate case, as well as for the fixed rate case. If you give back money to the bank, you get an overall reduction. You simply pay then a lower monthly payment, related to the residual amount of debt. This operation is possible, if the bank agrees on this, so before opening a mortgage, make sure the bank agrees on this kind of operations. The more money you save and give back to the bank, the more monthly payment reduction you get. And then, more reduction you get, the more money you can save, and give back again to the bank. This is the way I reduced my mortgage. It's a good general strategy to save money. Let's go back to the normal variable rate case. As you can see here, in the second part of your mortgage, the higher variable rate increases your monthly payment. So you have to pay attention to be able to afford a higher monthly payment in that case. To avoid this problems, there is a third type of interest rate. The mixed interest rate. It is a combination of the fixed and variable rate, with the feature of limiting the monthly payment to a maximum value. As you can see here, the mixed rate is a variable rate interest, with a limit. If the variable interest goes higher than a certain limit that you can define, your monthly payment does not exceed your decided limit. When the variable interest rate decreases going under this limit, your monthly payment decreases accordingly. This security system has a cost, so the bank generally applies a margin rate on this mortgage. So, which is the best rate to choose? It depends on your strategy, and how much you want to risk. The fixed rate has the lowest risk, as the monthly payment is constant all the time. The mixed rate has a security limit, and you just risk to pay more money in relation to the changing rate. The variable rate has more risks, as the monthly payment has no limits in case of increases. But we have to say that with a good strategy, the variable rate permits us to save a lot of money. So decision is just based on the strategy, and the risk you want to take. Let's go now to the house you have to find. To save as much as possible money with your mortgage, you should avoid to choose a house that doesn't fit your needs, as you could decide to change house in future, and every change has a cost, even on mortgage side. You should also avoid to buy more than you really need, because this means throwing away money even on mortgage side. Try to find a home that fits your needs, much of the time. Why should you have a bigger house, if you don't really need that space for 99% of the time, for example? That 1% of the time you need more space, you could organize yourself differently, by renting for some days a bigger place. You will save a lot of money doing so. Please consider the needs of the whole family by defining your strategy, and take your time to decide. You will find the best solution. A frequent question is, what is the maximum amount I can get from the bank? We can roughly calculate that by considering 1/3 of your monthly income, a 40-year time frame, and the interest rate. By multiplicating 1/3 of your income with a factor based on interest rate, we get the maximum amount the bank could lend us. Let's suppose the current interest rate is 5%. The related multiplication factor is 207. If, for example, our monthly income is $3,000 high, you have a monthly $1,000 budget for your mortgage. Multiplicating with 207, we get $207,000. This is the maximum amount usually considered by the bank. There are some exceptions, but you have to directly discuss this with your bank. Another example, with a $6,000 income, you get about $414,000 loan. And last example, with $9,000 income, you could get over $600,000, but the maximum amount could be limited in different states, or some banks simply don't want to lend more than certain amount. So, let's now have a look on the last item. Timing. How long should I pay a mortgage? As seen before, the longer the mortgage, the higher the interests. This, because you are giving back money to the bank at a lower speed. Let's consider the monthly payment at a certain time. At this time, more than 2/3 are interests, and only 1/3 is money for giving back the loan. In this example, at about half the time of the mortgage, the monthly payment is composed by half of interests, and half of principal. Near the end of the mortgage, only about 10% of the payment are interests. Let's use some numbers, to better understand the impact of time on a mortgage. For example, with a loan of $200,000, an interest rate of 3%, in a 15-year mortgage, we throw away $49,000 of interests. By 20 years, $66,000 of interests. And if we go to 35 years, we pay $124,000 of interests. So a 15-year mortgage saves $75,000 of interests, related to the 35 years mortgage. What if the interest is 5% high? In this case, the difference is much higher with time. In both examples, more time means being for more time in the left area, where the interest quote of your monthly payment is higher. From a timing point of view, the higher the time, the higher the money loss, and the higher the time, the lower the monthly payment. You have to try to reduce the time, without risking too much and without cutting important things for your family. To recap, to choose the best mortgage you need to think on your monthly budget. The strategy to save money without risking too much. Choosing the house that fits your needs but without wasting money. And the best possible timing to gain some savings. If you still have doubts on how to proceed, try to select and follow one of these sequences. First you find the house, then you calculate the loan you need and the budget to use for your mortgage, you select the interest type, and timing comes on its own. Second, you find the house and calculate the loan amount, you think about best saving strategy choosing the interest type, and the timing, and budget comes on its own. Third, if you want to manage your house more as an investment, then define your strategy with budget, interest type, timing to reduce wasting money, and then you select the best possible house that fits that conditions. Fourth, same investment strategy, but selecting by default the variable interest type. After you understood and prepared the different strategies that best fit for you, contact different banks to try to find the best rates. Every bank has its offer. The more you are prepared, the more you will be able to get the best tailored mortgage for you. I hope this tutorial was helpful to better understand the mortgage world. Thank you for watching Simple Money Tips. We are working on other tutorial videos, and if you have some questions, please write them down here. If you want, leave a like or subscribe to this channel. Thank you very much.